Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. It's Friday, so you know what that means. It is earnings on the radar for the upcoming week. I love these Friday videos just because it kind of gets the mindset in line with stuff that's coming down the pipe, right? And that's really when you play catalysts, it's really important to just have an idea of what's coming up so you can game plan for it, get mentally prepared, kind of get that position in line with what you're looking for. So these Friday videos, I really hope are helpful in that regard. So without further ado, let's jump into it here. Monday morning, you know how I feel about Monday mornings. Typically quiet, and this Monday is really no exception. Finisar is actually the only scheduled name Monday morning. The issue with Finisar, though, is that they are in the process of getting bought out, so earnings really aren't relevant, right? You know, it was IIVI is the acquiring company. They're buying Finisar, so probably not a whole lot of action there. If it was the other way around, if it was like if the acquirer was reporting, then that's a different story. But the fact that Finisar is being acquired, not so much. After the close Monday, really, I'd say like the only interesting name is a smaller cap software stock, Coupa. So software stocks been kind of like as a group one of the busier areas. It's like retail and software. I think that those have been like the majority of earnings over the last couple weeks. Uh, so you know, I, this week was a really good example of how sentiment plays such a huge role in these tech reports. And I feel like the numbers should be pretty solid for Coupa. Last quarter, so you can see the last two quarters, really nice number, a big blowout number back in September. So increasingly good numbers, big moves. Um, options here pricing at about 8.5. So it moved just about it moved a little bit over 10 last quarter. So 8.5, it's it could possibly move more, but it doesn't seem like it leaves a lot of room there. Depending on how this weekend goes, I mean, we could have a pretty sizable move Monday in the overall market. So it's kind of tough to get like a feel for it. It's already had like a big rally with a lot of like these other stocks off the low. So options are a little bit pricier. Settlement is not as great as maybe some other ones, so probably a name I'll be leaving alone. But if I had to pick, I'd say bullish biased on Coupa, but maybe not that big of a move as it's seen the last couple quarters. Before the open Tuesday, a handful of retailers. So AutoZone, dollar wise, probably gonna be your biggest mover. Cons, CONN, Dollar General, which we just played this week, and Movado. So um, first off, Dollar General, we already played this because this was a sympathy trade on Dollar Tree, which reported this past week. So we're going to sit this one out. The way this works is that Dollar Tree goes first, so it kind of removes the surprise for Dollar General. So just plan on leaving that one alone. Uh, AutoZone is really tempting, right? This chart setup is great. Let me go back a little bit longer. So what I mean is, I mean, look at this. Look at where it's hanging. I mean, just this really nice flag that's forming above long-term resistance, right? Like multi-year resistance. Um, the last couple quarters, so coming back, and the last couple quarters have been solid for AutoZone. Um, this quarter so far, AAP was solid, O'Reilly was solid. So AutoZone couple quarters in a row good, AAP good, O'Reilly good. So you got to be bullish biased on this. The biggest issue for AutoZone, though, is the options. Spreads are just absolutely brutal on AutoZone options, and the contracts are really thinly traded. So, as great as the setup is, it makes it so tough getting in and out at decent prices. Like it's just you don't want to pay 2 or 3 point spreads on 2 or 3 point options. I mean, it's just the lack of liquidity is miserable on these. Uh, Also, they're pricing in 55 points. which it's exceeded that. It seems like every other quarter it has, maybe like a big move. It's had some wild reversals, had some big gap downs. 55 points, maybe in line with its average. It's had some quarters when it's moved like 20 or 30, some when it's moved 70 to 100. So 55 is not outrageous, but when you combine that with, like the overall environment where it's kind of been kind of tougher to get paid on things near the high, options are tough. Thinking that if you want to play AutoZone, you might have to go at it with like a sympathy trade on AAP or O'Reilly, just because like those options are better. Um, but yeah, bullish biased on this, but we'll have to wait and see what the AAP and O'Reilly options look like. See if there's any room to capitalize there. So cons also typically a pretty big mover when it reports. Pretty consistent too. So it's averaged about 6 points on most of its. So big move. So you can see, right, big move, big move, big move, and now it's kind of hanging out. It's hanging out by back down near. Well, it's not, it's off its June low, but it's at the lower end of its year range. Had a big reversal last quarter in a kind of like a tough downtrend. The last couple quarters have been good. The stock has been acting bad, so that's like mixed signals. Options are priced in about 4.5, which again is it's not crazy because it's moved about 6 on average the last 3-4 quarters. Uh, it has a history of moving. It's still pretty heavily shorted. Uh, the setup, it could kind of go either way, right? Like it's big move, big couple moves, but it's hanging near low of the range. So I kind of like it as a volatility play. Straddle, strangle. Maybe have to do something with spreads, just because you might not get much more than 6. So with options of 4.5, maybe have to like spread it out. Okay, after the close Tuesday, you have a couple tech names: HPE, Marvell, and Zscaler, and then also a couple retail. So Ollie's Bargain Basement and Restoration Hardware. So HPE we played last quarter, and it really wasn't much of a mover. It's right here, this spike, and I'd say I'd say this setup is maybe not as good as it was back in August when we played at that time. So it didn't move much then. Setup isn't as great now. It's probably going to avoid Marvell, MRVL. So MRVL chip stock just in a tough slide lower. I mean, you can name probably 20 chip stocks in a similar pattern right now. Um, you know, it's really tough to expect much different. I mean, the charts and the sectors are so similar. I mean, it seems that like the trend is lower and it might not have enough in it this quarter to really break that. So probably just an avoid for the time being. So I guess of the tech group, that tech group, maybe Zscaler provides some opportunity. A relatively recent IPO, and it's been spinning around. You can see low 30s up to 40. It's forming a little bit of a head and shoulders, right? You can see pretty obvious there. It's had a couple of strong quarters in a row though, and these software stocks have rebounded pretty nicely. So the thing with Zscaler is it's couple good quarters in a row, and if it can go maybe $3 or $4, it would break up this inverse this head and shoulders pattern, and it kind of opens it up for room to the higher 40s. So I'd say bullish biased. Again, another name though, options are on the high side, priced in at about 6.5 to 7. Maybe some sort of again another one, maybe some sort of spread. You're bullish biased, but slightly more risk averse. You don't want to lay out a ton of money. You might not get that huge move higher, but some sort of spreads targeting a move maybe into the mid to low 40s. If it can get through low 40s, got 45, 46 up in here. All right, Restoration Hardware is going to be probably the big mover of the night, of Tuesday night. This thing has just had massive swings this year, right? And so huge move higher in June, huge move lower in September. Got hit for about 20 points. It's been sliding. It's formed like this really nice pennant though, which you can see, right? Just quickly, let's do a quick trend. So it's formed like this pennant going into earnings. So it has a history of massive moves this year, forming like a decent technical pennant on the chart. Pretty key levels, about 10 to 15 points either direction, which is what I love for like those earnings combo trades. Options, the weekly straddles priced in about 18 points, but it's exceeded that every quarter this year. So, it's priced in at 18, but it's moved greater than 18 every single quarter so far in 2018. So, to me, like the options seem like a little bit underpriced, especially with a decent technical setup. So, thinking volatility strategy here. Tight pattern, big swings this year. Maybe looking at a strangle, setting like the outliers, looking for like a move. 10 to 15 points. Above. As you can see, like 130. So right there is like 20, or retest the low. A little bit less, but there could be room down to 100 underneath that. So kind of like the idea of like a volatility strategy on Restoration Hardware. It's got to wait and see what the contracts look like. Might have to like stagger that a bit. All right. Wednesday before the open, a couple more retailers. Abercrombie, no, it's not Abercrombie. American Eagle, which look at this. Look at this Head and Shoulders that's formed. American Eagle, G3 Apparel, and Land's End. So, I'd say of those three, Land's End to me it looks like the best setup with the most potential. And you can see, big pop, right? So about a greater than $5 move here, $5 move here, right? Sank all the way down to like 14 area, and now it's bounced back up to 20 to 21. So what's interesting about this is that options are priced in at about 3 points, but there's basically $5 gap, a $5 well-defined gap up, and then 5 to 6 to maybe even like 7 points lower just to retest the low. I mean, it's moved 5 points the last couple quarters. It has key levels, 6 points lower, 5 points higher, but it's only priced in at 3. That's like flashing signs in my head. It's not like it's not like a name that's on everybody's radar, but to me, like I love this setup. Big moves, big gaps. Options are pricing in about half of what it's moved the last couple quarters. So that one's definitely going to be on my radar. After the close Wednesday, Lululemon and Five Below, and both of these are probably going to be big moving names. Also, though, you have Cloudera, CLDR, and so a couple smaller software names, and Okta, OKTA. What's really interesting is that Lulu and Five Below are. I mean, it's bizarre. I mean, these stocks really have like no relationship to one another besides being retail. But Lulu and Five Below are actually really similar setups. Watch when I do this. So, you wouldn't expect correlation to be high between the two, but I mean, look at this. I mean, Lulu. This is Lulu, and this is Five Below. I mean, one's a high-priced athletic, one's low-priced dollar store, give or take. So both stocks. I mean, going back even further. I mean, both stocks have been incredible this year, and coming off, both had back-to-back blowout quarters. So huge move higher in June. Huge move higher September, August, right? And they both have rolled over recently, or both sitting right around their 200-day. The biggest issue is that expectations are really high. When you have blowout, back-to-back blowouts and huge moves, stocks are up a ton year to date. Expectations get elevated. Options are expensive. Lulu's priced in at 15. Five Below's priced in at 10.5 to 11. So if you're gonna play these, it's going to have to be something where you kind of take the risk down. Spread, fly, maybe even like a calendar spread. Like momentum in the earnings say, you probably should be bullish biased here, but in this environment, with high expectations, it might be kind of tough to get paid on those types of moves. So like if you're gonna play it, I feel like you need something to like manage the risk better. So maybe like calendars or flies or something along those lines. Um, OKTA, let's go to that. So let's go to this. So Okta, it's really just like a similar setup to a lot of these software stocks. Got smashed, now it's ripped back up above the 200-day, in the last like 2 weeks. Pushing up into monthly resistance here, right? So if it can break through this, then it's got a really obvious level up into like 70, low 70s. Again, like just to reiterate, options aren't cheap on this one, just like a lot of these other software stocks. Pricing in about 10 points. So, I mean, the setup looks good, bullish bias, but probably going to have to do some sort of spread because 10 points seems like a pretty steep move in this tape at the moment. All right, Thursday after the bell, more retail, right? Probably sick of it at this point, but I mean, we're in retail earnings. So you have Kroger, Michaels, Duluth Trading, which has like the best commercials out there, Signet, and Children's Place. So first off, Kroger. This has been a go-to play basically every quarter this year, and it's ended up exceeding its price to move basically every quarter this year. So options are priced in 2.25-ish, give or take, but it's moved. But it moved 3.5 last quarter. Moved 3 the quarter before. I mean, I just it's a boring business grocery store, but this one is just so consistent. It's great historical moves on earnings. Up or down, it doesn't matter. The thing moves. The price options are pricing at 2.25. It's exceeded its price to move every quarter this year. So if it's not broke, don't fix it. Options look underpriced. Go with the volatility strategy. We've played it every quarter this year, so I'm probably gonna play it again. Signet, I kind of like the bear setup here, right? Big pop last quarter, but if you look at the numbers, they weren't as strong as that move would indicate. Giving back the entire move, right? Just hovering, so it's flagging underneath the 200 and just hovering over just a really well-defined gap. So all the technical momentum is swung to the downside now with like a major gap underneath. Tiffany missed, right? So Tiffany just missed this past week. There's been news a couple weeks earlier about low-end diamond prices being cut, which is going to affect Signet probably. So, Tiffany's missed, diamond prices being cut. It just seems to be negative signs. Options are priced in about 8.5 points. That's only about half of what it moved last quarter. But that's also a little bit more in line with what it's moved in the past. So I'm thinking maybe like a speculative put spread here, but definitely bearish into this. I got that circled on the calendar there for a bear bet. After the close Thursday, Broadcom is the biggie, but also DocuSign, which is another software play, and Ulta, which is also typically a mover. So in retail land. All right, Broadcom. It hasn't been great on earnings over the last couple of years, but the stock is acting a little bit better after last quarter. Had a big pop in September. Earnings weren't bad as feared. Nice little tight flag, right? Actually more like a pennant, really. Forming like a nice little pennant here. Right. So probably looking at earnings as the catalyst to break out, or one way or the other. Not necessarily up. Options are priced at about 15 points, so they're not on the cheap side, but it did move 20 last quarter, right? And you got some good levels, kind of a tight technical setup. So you're maybe a volatility strategy here, saying options are priced at 15, but maybe you could see like 20, maybe even 25 if things really start to pick up momentum. Put it maybe up in the low 250s or back down in like the 210 area, right? So some sort of volatility bet there. DocuSign actually, when you compare this to other software stocks, I mean, you can see like some serious relative weakness here, right? This thing got beat up pretty bad after last quarter. sinking, steadily sinking. It actually gapped last or 2 weeks ago to put in a new all-time low, broke the IPO low down here, right? Bounced off of it, but it's still within striking distance of that IPO low. And coming off like a lackluster quarter, stock has been acting terrible. It's priced in at about 6 points, which if it gaps down six, it could trigger another wave lower, and then once if it finally cracks this IPO low over here, it just could be like a massive washout. So I'm thinking maybe like a speculative bear bet on that actually. A little against the grain in the software stocks, which most look pretty bullish. This one looks pretty bearish. And Alta. All right. So Alta, this one tends to have pretty big moves, but this quarter's gonna be a little bit different. So just a couple weeks ago, they had their analyst day where they gave guidance. So if you guys remember, that was actually a trade we were in. That was it was a call fly for that analyst day. So the stock has already had a pretty big move just in response to that. So not really sure how much is left in the tank here. Options are still pricing in about a 21 point move though. So in a setup where like it seems that like a lot of the news may be already out, options are still expensive. Thinking maybe like a calendar spread, calendar call, calendar put. Basically, it's some sort of strategy to take advantage of high implied volatility where you're thinking the stock may have a more muted move. So that's what I'm thinking with Alta. All right, last one, Friday morning. Friday morning wraps up with Big Lots. So Big Lots is coming off a nasty quarter, actually a couple nasty quarters. So here, and then here. So back to back nasty moves lower. This set up a big reversal, but then it gaps right back down. I just feel that this thing is just flagging in the low, just waiting for like another negative number to break down. Because look at this. Look at the long-term chart here. I mean, it just seems that like there's just no momentum. There's no technical momentum. There's no earnings momentum, and a decent move into like the mid 30s could just create this big washout. Pent up multi-year breakdown. So I'm thinking maybe take a shot on some sort of speculative bear bet. Just with the stock having no earnings momentum, no technical momentum, you think that maybe you get lucky and it's lays an egg and then the stock starts to break down. You get like this that combination move where breaks 40, breaks mid 30s, and all of a sudden you're looking at a move down into like the low 30s, right? All right, so that's that. Still plenty going on, right? As you can see, we're getting into the end of the year, we're well past the heart of earnings season, but there's still plenty going on, which is great. This weekend also ASH conference, biotech land, so expect some bios moving around, and yeah, lots to continue to look forward to, and then as we wind down the year, I mean, then you can start looking forward to the beginning of January, and that presents like a whole new range of events. So lots going on. Have a fantastic weekend, guys, and I will talk to you all on Monday.